Right. My name's Stevie Downes. I'm part of a Positive Money group in Belfast, and Positive Money is a campaigning organisation that is seeking to reform the commercial banks. We would argue that the 2008 crash was largely responsible because of the bank's ability to create credit. Consequently, the asset prices increased, inequality went up, and ultimately it led to the banking crisis. And therefore we believe that the commercial banks need to be regulated more in their capacity to produce debt. And it's that very debt, of course, that we're dealing with now in the recovery. And what I want to look at now is the nature of that recovery. And we are told that, in fact, the way out of that recovery is for more economic growth. Well, how does that sit with the climate change? Now, I know that this recovery is going to be considerably interrupted because of the COVID-19 virus. But I want to just look at, firstly, at the nature of the recovery as it is in January 2020. And to begin with, I want to introduce you to two people. You won't see them in this presentation, but the first one is a 36-year-old guy who is in 0 hours contract, and he works in the catering industry. He gets paid the minimum wage, £8.21 an hour, and he wasn't able to work for the first couple of weeks in January because of the slowdown. And consequently, he didn't have much coming in. And I just want to pray to give credit to all of those people working in 0 hours contract for their perseverance, because it causes an awful lot of anxiety. That guy, that 36-year-old guy, is my nephew. Now, the other person you may know is Denise Coates. Denise Coates bought a domain name for £10,000 in 1990. That domain name was Bet365. Last year she was paid £343 million, and if we assume an 8-hour day, then that will be £162,500 an hour. Now that would take my nephew, if he didn't eat, didn't pay any council tax, any water rates, heating, that would take him 6 years and 9 months to earn that. Now that is the income range that we're talking about, which is the nature of the recovery. And I'd refer you to Thomas Piketty's great study into 21st century capital, and he referred to the current state of capitalism as the historic norm. And I mention that because the contrast is often made from where the period was whenever the income inequality was not as great, and that's the post-Second World War. And that time, the average CEO's salary was 20 times the average worker's. Today, it's 361 times that average. And that's the reflection of a very radical change in policies that took place between the post-Second World War and now, and it's those policies that are leading towards this economic recovery. Now, I would like to share with you just some of the people's concerns, those people who are very supportive of capitalism and think that, like me, that it needs changes. And these quotes I've taken from the Financial Times of the 8th of September 2019. The first one is from Marty Lipton. He is an experienced US corporate lawyer, experienced of some 55 years. If we don't act now, I don't think capitalism will be around in the next 50 years. The second quote is from Lynn Forrester de Rothschild from the same paper. The people saying the system is broken are not wrong. If we don't have inclusive capitalism, we can surely expect capitalism to be replaced with something far worse. And Paul Polman is the ex-director of Unilever, and this quote comes from The Guardian, the 21st of July 2019. If you don't address inequality and climate change, to keep it simple, a lot more people are going to be dissatisfied, feel not included or left behind, and making these choices of rejection at the ballot box. The fact we are having these issues of populism and schisms in society is exactly because we are not addressing the underlying issue to evolve capitalism and make sure it works for everybody. And recently, Martin Wolf in the Financial Times, this was the Financial Times whole cover, and also inside, Martin Wolf was very much against rentier capitalism. It is rentier capitalism that is going to apparently help us out of the economic dilemma we're in. So if we could just look at that, the way forward then for economic growth, how does that sit then with climate change? One of the ways that has been suggested is to have a steady state growth, and who better to explain what a sustained economy would be than Professor Herman Daly. And he's said that we should take no more water out of our rivers that can be sustained through the rainfall, that we shouldn't take any more fish out of the stocks that can be replenished naturally, that we shouldn't cut down any forests that can be regrown naturally, and that the ecosystem shouldn't be interrupted by either, say, building of dams or nuclear energy. That also we need to ensure that the pollution we're able to absorb that pollution naturally, and that the mineral resources that we use we should be able to restore those mineral resources. However, Professor Herman Daly himself does admit that the depletion of mineral resources is inevitable, and then, well, where would that leave us? Now, there's another alternative then to considering that sustained economic development would be to decouple. And what's involved in decoupling is to use the market mechanism along with technology to see if we could manage to continue with economic growth while at the same time relying on technology to make sure that doesn't impact the climate. And some of the examples that are used with that was that the price of aluminium has gone up so much so that it was forced the canning industry to reconsider alternative metals. And so now we can produce cans that a child could crush, and that is because of the market has meant that the price of aluminium going up has forced them to look at alternatives. Another option, of course, is iCloud, and that has reduced our dependence on documents having to be transported around, legal documents, commercial contracts. That can all be done online now, and the sharing of the production platforms. You could use chassis, for example, from VWs and Skodas. That is all an attempt to bring the cost of production down. The one difficulty with bringing the cost of production down, of course, is it has its own downfall tied into it. You've got increased efficiency, which means prices go down, and then people buy more. And that means the GDP goes up and economic growth becomes a problem. Now, those increasing efficiencies since the 1990s have meant that the carbon productions have gone up 40%. So that decoupling does produce problems. The other thing then, of course, is we could move into a low growth scenario. Now, Professor Dietrich Vollgrath has argued that our current state of low growth is a positive outcome for capitalism. And he argues that on the basis that there is a reduced need for labour, and there's a move from production of goods into services. He would go on to say that our incomes, that we've spent a lot more on income on services now. It was 40% of our incomes were spent on services in the 1950s. Now it's more like 70%. And he uses the parallel with barbers, that it's possible to increase the efficiency of the equipment that a barber will use to cut hair. However, it's difficult to imagine how you can increase the efficiency of the process of cutting hair. And the same with social care workers. You cannot increase the efficiency by which a care worker would go in to take care of our elderly. And that notion of efficiency can only apply to things and the production of things. So it's a natural state. However, what he neglects to mention is that we still continue with growth at 2%. What that will entail, for example, is that the US economy in 100 years' time will be 8 times the size. Well, the implications for our climate don't bear thinking about with that. That takes us into the last scenario, which is to abandon growth altogether. Now, the abandonment of growth is equivalent. It would be not having any increase in jobs. We wouldn't have an increase in production. That is very much an unstable state for capitalism to be in, because it's a description of a recession. But Professor Victor, a Canadian professor in environmental economics in Canada, he created a computer model in 2010 that we reduced GDP by 30%. What was involved with that was there was work sharing, there was a redistribution of incomes, and there was a carbon tax, and there was education programs that were introduced. And that over that time, the GDP to debt ratio, the unemployment rates, the poverty index, and the carbon emissions, they were all reduced by 80%. So I would commend Professor Victor. I would encourage you all to go out and investigate the work that he's done, along with another associate worker, Tim Jackson, Economics Without Prosperity. Well worth looking at, and those would be the alternatives that I think that we need to consider. Now, the policy implications of all that I've been talking about would be the following: that we would need to be thinking in terms of community wealth creation, and I refer here to Marjorie Kelly from the United States, and she has promoted the Evergreen Cooperative in Cleveland in the States. Cooperative movements are one way forward, and it's finding work that in itself has value and bestows value on the people that are working in it. We need to have a stake in our communities. And we would do that by having cooperatives. We could do that by having local banks. We need to have a regulation on capital movements as well. That must come in. We need a progressive tax system. The taxes now are way below, for example, what they were in the 1960s. So it is possible to introduce these things if we have the determination to do that. I think also what we need, of course, is to have some regulation in the banking industry. We must break that link that commercial banks have with creating the debt. We need to wrest that back and give control, democratic control, to elected governments to enable to have control over the budgets that they would set. At the moment, the capacity of commercial banks to create that debt has led to the booms and slumps, and we need much more control over that. So to end, I would encourage you to look at Marjorie Kelly and Tim Jackson and Professor Victor. Look at the notion of consider cooperatives, consider the tax redistribution, and consider a universal basic income as well that we need, that will be part of the transition that we will have to face when artificial intelligence begins to kick in and jobs are reduced. And so I will leave it there. I hope that's given you some scope to consider those policies, and I'd urge you to do so seriously. And I'm very grateful to the Imagine Festival in Belfast for giving me this opportunity to spread the message. Thank you.